Let's take it over to Alan Knuckman, the Chief Market Strategist at Paradigm. Alan, you have been ultra bullish on the stock market. What's your take now?
Hello, Angie. Higher highs should be no surprise. We're seeing new all-time records in the Stock 600, which is Europe, Japan, the NASDAQ, the S&P, the Dow. So we want to trust your trades and our strategy for success. So we've got time for our laggards to leap.
Your new trade is in a drug company. Now, Big Pharma is having a big year. What stock have you uncovered that might have some more room to run?
All right, today's trade trigger is in Bristol Myers Squibb. So the biotechnology sector has come booming back. IBB, the ETF that tracks that, is up about 10% in the last year. Now, BMY itself is down about 25%. This is a stock that's trading for about 51 right now. Right now, we're trading between 47.5 and 52.5 for the last 4 months, making a nice solid bottom base with a breakout target of 57.5.
What's your call option strategy on Bristol Myers Squibb?
All right, speaking of that bottom, we're also seeing bullish divergence. We made new lows, but not new highs in implied volatility just 3 weeks ago. Also, there's a big spike in leveraged option buying on the long side for this company. So somebody sees something, the PE is 7. So let's get into the details. So what I'm looking for here, again, we've got a bottom base in place. I'm looking for an August option, the August 45 call below that support base. That 45 call for August trading for about 7. There is also a gap up above at 55 to get filled in. So a lot of positives there. The option has 6 months of time and you're paying 7, but it's $6 deep in the money as we've had success with that strategy.
We are calling on you for some trading day takeaways.
All right, let's talk trading takeaways. Trading takeaway number 1, little left. What I mean here is the IWM, the Russell 2000, the small cap stocks, they're set up for a big breakout to the upside. So they're the last of our major markets that hasn't participated. So that could be the next catalyst in stocks. Number 2, earnings end. So we've had positive earnings, beating expectations, and for me, what I paid attention to is we have 13 consecutive quarters of revenue growth. So revenue growth is very, very positive for corporations. So that's the most in history since they've been keeping this stat since 2008. And number 3, fear not. The VIX has dropped 20% in just 2 weeks. It was sitting at the 18 level, that 18 top. Now we're at about 13. But we're still 10% from the 2024 low. So more S&P upside to go.
Have a great trading day, Alan.
Thank you.
Go to businessfirstam.com for where to see our show on TV.